Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage your risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely late June Wednesday afternoon in the Midwest. Joining me today from Wichita, Director of Feed Foundations, Mr. J. Kingsley, and from Fresno, California, Senior Feed Market Advisor, Miss Natalie McCarty. Team, how are we today?
Doing very well.
Good. Good afternoon.
Good afternoon. Natalie, how are things in California today?
Good. Good. It's warm. Summer in Cali.
Summer in Cali. Very nice. Jake, how are things in Kansas?
Pretty warm out here as well. Not quite as windy as it was last week, so we're summertime here too.
And you know what, Jake? Let's just say, you've been the theme maybe for the past like 2 or 3 episodes now, because everyone is writing in saying, hey, this Jake Kansas wheat update has been pretty impactful on the market. And we talked a lot last week about wheat running up on a pretty impressive rally based on everything you've been saying. Wheat has tried to give this up over the last few sessions, right? We've had a pretty good pullback, almost giving up this rally. So we've essentially erased it. Jake, is this coming from you as well? Have you been broadcasting shifting conditions in Kansas?
I have. Telepathically, I have. Yes, I think it's dried out here in a hurry. We had pretty warm temps and very strong wind for, 3 or 4 days. So folks were able to get back to it a little quicker than expected. I think we're still behind average pace, but making progress across Texas, parts of Oklahoma, and Kansas now. They'll be moving north here pretty quick.
Okay. All right. That's good to hear. I mean, and for the sake of our corn buyers and wheat potentially providing a little bit of support indirectly, perhaps, to the corn market over the last week or so, I think maybe wheat giving up some of this strength a little bit may have also helped remove some of the strength from the corn market. So, Jake, again, just throwing it out there. People are listening, right? Our several listeners are listening very intently, and they're also watching your plants back there too. Like, we don't know if they reflect what the hard red winter wheat crop is like. We don't know.
I would say they're pretty representative. Yeah.
Let's I actually don't know if that's bullish or bearish, because I don't know what to think when I look at those plants, other than they're lovely. But we have a lot to run through today. Paige, if you would kindly timestamp the broadcast. It is Wednesday afternoon. Last week we recorded on Thursday, perhaps. We've been switching up a little bit just to accommodate for some reports and some days off and market holidays and whatever that might be. But we're back on Wednesday at the moment. And I think the big report coming up is going to be Monday. So we're excited to talk about that. But in the meantime, let's just run through the settlements for today real quick, because the board was red today. The board was red. We had December corn down 6.5 cents. It's down to 422.5. December corn. We finally broke that 435-ish support level that we've been talking about on the show over the last few weeks, if not a couple months now. This was the week we broke that support. So down in the 420s here for December corn. Very notable trade. We had December wheat was down 8.25 at 567.5. And we had December meal, that not as stubborn little byproduct, was down 460 at 290.70. So Dece meal not only consistently trade over the past couple sessions at or below $300 a ton, but we're trying to test 290 now, which we'll discuss in a bit too. And then December oil, which has had a fun ride of its own, referring to bean oil, was down 29 points at 52.32. And that market, which we've also talked about here, Jake, has been on quite the run here in terms of huge rally over the week or so, and then giving some of that up as well. So there's a lot to discuss here. And Jake and Natalie, having you both on here together to be able to talk about the feed markets, as you are both our feed advisors here at EverAg. I think one of the things we talked about with Jake here a week ago, and we're even trying to even preview it a couple weeks ago, was that EPA draft proposal. We don't want to beat it up too much, but we need to talk about it again briefly because it did have such an impact on the bean oil market. And then I think one could argue a catalyst of keeping Dees meal now pinned at and below $300 a ton here for a bit. So I guess, Natalie, to have you back on the show, what were your thoughts on that draft proposal and how are you viewing that as a market impact moving forward?
Absolutely. Obviously, the numbers that the EPA has proposed are very bullish to especially soybean oil, but also they included canola imported oils as well. So that is good news. More crush for oil means more meal available, which should be good for the feed buyers. A couple cautions, though, I want to throw out. This is just a proposal at this stage of the game. There is public comment periods that go on until August 8th. And there's actually a virtual hearing that's going to be held on July 8th. So it's a proposal. It's a great proposal for the industry, but it needs to also pass too. So I think you just need to be cautious. Also, on the canola oil side, imported oils do not receive as much of a benefit in the proposal as US vegetable oils. So they just don't receive as much money. So that just needs to be taken into account as well. Canola oil will not be, if this passes as is, will not be as competitive as US soybean oil.
Okay, and I think, Natalie, that's been a very key element of this discussion too, because of we've had the used cooking oil discussions over the past couple of years on the big increase on Asian used cooking oil coming into this country. Then, of course, the use of canola oil coming over the Canadian border as well to, I guess, be a part of the blending program for our biodiesel and renewable diesel. So I think that's a really important point is it continues to emphasize, let's say, a leveraging the domestic oil, vegetable oil, in this case, bean oil for our discussions into some of these blends. So that's really important. Natalie, if we were to prioritize domestic vegetable oils here, what do you think that does for our meal market for our dairy farmers?
Well, I think we're already starting to see it. All else being equal, soy crush should be able to be more robust than canola, assuming no other factors. So more soybean meal available. We've started to see the spread between canola meal and soy meal come in and narrow. Canola is still per unit of protein cheaper than soy, but I look for those to stay pretty neck and neck as each of them fights for space in the ration as they have opportunities for oil sales. So I think that's what we need to be watching.
Okay. And like Jake, for your side too, because you talk to a lot of folks in the Midwest and also out east, are you seeing this start to reflect in those either the Midwest and Northeastern markets too? Because I mean, there are some differences sometimes about how out west, southwest are impacted versus other parts of the country. Is that what you're seeing as well?
Yeah, I think we actually saw a little bit of opposite move of what Natalie saw out west. And what I mean by that is I think, Natalie, you saw canola probably lead the market lower initially, and then soy followed a little bit. And we saw the opposite in the Midwest and the East, where soy pressured lower first and put in some new lows on the basis side versus what we'd seen in the last few years. And canola is just now really starting to make that move. But both have trended that direction, and they're attractively priced at this point.
I think some of that as well is that, and it goes back several months now, but China put the 100% tariff on Canada on canola meal, and it happened really, really quickly. And literally, there was trains that were on their way to the export market that ended up getting diverted into the United States. And I think the Western markets got a lot of that benefit of that cheaper canola. So that's why canola led its way lower in the beginning in the West versus what Jake is mentioning in, the Midwest and the East.
Yeah. And I think for everybody tuning into the show, I mean, this conversation is exactly why we need to pay attention. Obviously, I would promote working with our feed advisors at Everag, but the global impact and international impact on our markets, I feel like we've almost forgotten about the trade war discussions. I think we're going to be hitting a fresh round of those headlines in the coming weeks. I think perhaps it's July 9th. Maybe, as Natalie, you were telling me earlier, was that that could be the next round of headlines in terms of the trade discussions across our international partners, because there's been a lot of other things happening, I think, in the globe that have taken center stage, if you will, like perhaps a war in the Middle East, however brief it may have been, hopefully stays that way. There's been other things kind of taking the headlines lately, but that trade element is still very important. And it really did rock our markets, not just futures wise, but it rocked our local cash feed markets and continues to have a longer term impact. So I think that's going to be really interesting. I think the report we're going to see on Monday also makes things very interesting, because now the market is trying to gauge, coming out of a federal holiday last week. We had a shortened trading week. We'll have a federal holiday at the end of next week. So there'll be another shortened trading week, a 3-day weekend. Managed money is always trying to gauge risk going into holidays and or weekends, especially in the summer, as we trade these weather markets. We appear to have come out of last week's federal holiday and weekend, along with maybe what has been a solution, and I use that delicately, a solution in the Middle East at the moment. But the de-risking element, managed money is feeling more aggressive on the position that they want to take. The last 3 days, and we used to say on the floor, the funds trade in 3-day sprees here. The last 3 days have been pretty red on the screen for both, well, really for a lot of our commodity products, but beans, corn, both. Beans have really pulled off those highs. Corn has really fallen out of bed, breaking those support levels. Then we have another weekend coming up, and then this report on Monday, which can be very impactful. That's going to give us an update on acreage versus the end of March projected report. This is going to come pretty close to what we have actually planted this year. And then also stocks of our particular commodities as of June 1st will be reflected in that report. So Natalie, as we move into that report, we're focusing on acreage, we're focusing on stocks. Just of your opinion, which do you think is the more pivotal report of those two?
Projections right now coming out of the acreage report are in consensus is fairly similar to the numbers the USDA is using in their stocks to use reports, which last one was on June 12th. So the acreage numbers are very similar to that are being described. So unless there's a really big surprise there, I think that's a non-event. I think the stocks report is going to be interesting. The government is saying we have a very tight corn ending stock in particular, but the market has not been trading like that is the case. So these quarterly stocks let us know where we're at now, as we head into this final quarter. So I think people will be watching that to see if there really is more grain out there.
We are, as we look at the stocks report, and the consensus of that is, the assumption is versus last year, we're trading a tighter corn balance sheet this year than we were 1 year ago. I think that's going to be crucial. I think then it's a matter of, what will we do with demand between June 1 number and what we do through September 1st to determine physical old crop stocks. So I think that's going to be super interesting too. But as we look at these, Natalie, if we think we may leave acreage fairly unchanged, what type of number do you think we need to see from the stock side of this to really kind of give us a gyration in the markets?
I think it's anything that would get us, because obviously the old crop balance sheet carries over into new crop balance sheet. So it's anything that really allows that new crop balance sheet to get back to the 2.0, for example. It's right at 1.75 right now. So you get back to a 2.0, then I think you can chase the lower handles on corn like you did last year, 380 and maybe even lower. So yeah, I think that's kind of, it backs into this new crop balance sheet.
Yeah. And so taking that like very psychological 2.0 billion bushel number for ending stocks, it's a key threshold, right? Because like you suggested, Natalie, if you can get back to that 2.0 billion bushel number, one could argue that's probably enough for managed money to really commit this thing to $4 corn and or below. That would be fairly in line with the assumption that they had last year at this time and going in through the summer, July and August. And we did trade 385 December corn, the 2024 contract. So we kind of have a few benchmarks this year as we work into this summer of what is that assumed balance sheet ending stocks threshold? And then people are using $4 and then 385 just kind of naturally based off of what we've seen last year. So to your point, Natalie, I think it's going to be really interesting to see what we do with those kind of psychological benchmarks we've given ourselves. Jake, I've heard you offline, if you will, use some lower numbers than last year's benchmark when it comes to that December corn number. So again, last year it was right around, I think, mid-August, we hit 385, bottomed out and started to recover gradually from there. What are you thinking, Jake? I'm not going to give you a bold prediction. I'm not going to hold you to a number right now, but just is there a chance if the stars align on Monday's report? Can we breach that 385 benchmark we've given ourselves based on last year's low?
I think we can. I think you're going to have to see several stars align, probably that we haven't really talked about on this particular episode, but uh, it feels like the market is already trading an expectation of either a small increase in acres or an adjustment towards that bigger balance sheet that Natalie's referencing. It feels like the market's already anticipating that. It seems like it takes a lot anymore to really surprise the market and see a big move on report day. So it feels like it's already trading some of those numbers. I think you would have to have a significant move in both of those categories on Monday. And then you're probably looking towards the July WASD data to see some sort of shift in South American information or some sort of unexpected cut to U.S. demand numbers on this probably both old and new crop to really push under 4. I think it's very possible. I think we got a lot of time left here and the crop is off to a tremendous start. So we got a lot of things moving in the right direction. And like Natalie said, it feels like this market is already trading as if there's a little more corn out there than what we've seen in the numbers so far. So I think we got a chance to move that direction here sooner rather than later.
I think the one thing I would mention, though, we do continue every day to see big moves in this market. We're getting close to what I think are many targets that people have in the back of their minds. Because of that, I would put those targets in as resting orders, with your vendor just in case. Okay. Because unfortunately, as fast as this market moves, it could get there and then move back the other direction on you, especially on report days. Sometimes things crazy happen on report days, and then they digest the information and go, oh, wasn't as bad as I thought. So resting orders are key.
Yeah, Natalie, that is fantastic advice. And if you are working with one of our feed advisors here at EverAg or want to and talk more through this, please reach out and do so, because having that order working with your feed mill or wherever you are procuring your grain and feed, that is very important because we do see big fluctuations on report days at time. We can go through and hit certain price targets and then trade back above by end of day. It always leaves an interesting discussion if you were not working something previously. So that's a great suggestion. And also just to throw out there, we set these price targets on both futures and basis for a reason, right? We've been analyzing the technical indicators and the way the charts have been looking, baking in the fundamental supply and demand in terms of how that impacts pricing overall. If you've given yourself a target at the board or at basis, stick with it. We can always adjust on other layers, if you will, or other percentages of your physical. But there's an element here sometimes when the market starts to break fast enough that people just want to pull all their bids because now they feel like they're catching a falling knife. They have to rethink the entire scenario. There's probably a good chance you had one of those targets in for a very good reason. If that happens to be your first layer as we trade 425 D's corn or 290 D's meal, those are very nice first layers. Very nice. And if you're upset about those being the highs down the road, those aren't bad highs to have as we move into the upcoming feed year. So it's important to keep those things in mind. I think that's great advice and great insights from both of you. And that being said, just want to thank you both for being on the show. Natalie, thank you for joining us from Fresno. Greatly appreciated. And Jake, thanks for joining us from Wichita. Appreciate that.
And Jim, thank you for joining us from Chicago.
Natalie, that's so nice. Yeah, we'd also like to thank the EVRAG Insights crew for their support. And thank you to Paige for her production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. See you next time on the grain feed.